After yet another booming month on the market, believe it or not, there are still some good deals out there to be found. And in today's video, we'll be discussing 3 stocks that seem like particularly great pickups for your portfolio as we head into April. But real quick, before we get to those, I want to hear from you. Leave me a comment below and let me know which stocks you currently have your eye on. I'd be curious to hear what you think is looking good. Now, one company that I find particularly interesting is Zoetis, which in my opinion isn't talked about as much as it should be. And in case you've never heard of this company before, Zoetis makes medications, vaccines, and other animal health related products, and they're the market leader in treating cattle, fish, and pigs, as well as companion pets like cats and dogs, which is currently seeing growing demand driven by what they refer to as the human-animal bond. Pet owners, particularly Gen Z and millennials, prioritize the health and wellness of their pets. They think of them as being like part of the family, so even during economic downturns, pet owners should still be willing to spend money to treat their pets when something goes wrong, which adds resilience to the company. Additionally, Zoetis helps meet the world's growing demand for protein by creating products that support the health of livestock. This actually makes up 35% of their revenue, and with the global population expected to grow by nearly 2 billion people by 2050, the demand for animal protein is sure to continue growing, and so should the products that Zoetis makes. Overall, I think there's a lot to like about this company, and regarding the share price, 2024 so far has not been kind to Zoetis. Just in the last month, guys, Zoetis has seen a crazy drop of about 16%, and you can see they've been on a pretty steady downward trend all throughout the month of March, which leaves them with a year-to-date loss so far of 15.75%, but then zooming out once more, looking at the performance over the last year, it's actually pretty flat. They're only up 0.35% in the last year. Still though, with this drop in share price here in 2024, the forward dividend yield on this company right now is sitting way higher than the 5-year average yield. In its own right, the forward dividend yield really isn't that high. It's just barely past 1%, so not a crazy yield at all, but still it is over 50% above the company's 5-year average. That's pretty crazy. And the rest of the dividend stats are looking pretty good. We get a nice low payout ratio below 30%. We like to see that, and we especially like to see that 5-year growth rate coming in nice and high at 23.5%. They've been growing this dividend for the last 5 years. Like I said a moment ago, I think there's a lot to like about this company, and I actually just added it to my own watch list, so I plan to dive a bit deeper into Zoetis over the coming weeks and months. Anyway guys, next up, Nike is looking like a pretty interesting one going into April. They recently saw a decent drop after reporting their quarterly earnings, where they did beat on both the top and bottom line, but still the results showed a 5% quarter-over-quarter drop in footwear sales and a near 13% drop in apparel sales, so it wasn't all good. And it left the stock with a 12% decline just in the last 30 days, and we can see right about here is where they reported earnings. They really jumped off a cliff right here. But anyway, this leaves them with a year-to-date loss of 14.25%, so another big drop there. And then zooming out once again, looking at the last year, Nike is down 21%. So pretty big drops all across the board. And just like we saw with Zoetis, that forward dividend yield is sitting way above the 5-year average by a clip of about 53.5%. So that's pretty insane, which leaves the forward dividend yield sitting at 1.6% or so. So once again, not the highest yield, but everything else is looking pretty good, guys. The payout ratio once again is on the lower end, coming in just below 40%. That's pretty nice. The 5-year growth rate is right there in the double digits, about 11.1%, very sweet, and then they've been growing this dividend for the last 11 years. Having said all of that, I wouldn't be surprised to see Nike continuing to go down in share price here in the short term, especially if the economic situation gets worse and people therefore spend less on Nike products. So I'd be careful investing a lot of money into Nike at this point. If you're going to start buying into this company, I would take it slow. I think right now is a pretty decent time to start dollar cost averaging into the company if this is one that you've been wanting to own. Anyway guys, the third company we're talking about today is one of my favorites. Yes, we are talking about Starbucks, which I know, I sound like a broken record at this point with Starbucks. But right now it is teasing us with a share price that is almost below $90. It is so close to getting there. It's a really tempting buy, guys. And in the last month, Starbucks is down 4.4%. So a little bit of a drop in the last 30 days. Looking at the performance year to date, they are down about 5.5%. And then zooming out once more, looking at the last year, they are down over 8%. And Starbucks is right there at their 52-week low. And with this drop, I'm officially in the red on my position as well. If we take a look at my dividend portfolio tracking spreadsheet here, which you can start using for free, there is a link to download the spreadsheet in the description of the video. But here we can see I have about 50.5 shares of Starbucks at an average cost of $90.88. So with the current share price where it's at, I'm down just a little bit. Just in terms of share price, I'm down about 0.25%. Nothing too crazy. And over these last few months, guys, I've been really focused on building out my Visa position, but Starbucks is definitely tempting me right now. And if it continues to head south, I might have to hit the pause button on Visa and go a bit more heavy into Starbucks. I'd love to continue building out this position and keep working on getting this position to over 100 shares. At some point, we'll get there. But enough about me, guys. Looking at the dividend stats here, starting with the forward yield, this is coming in pretty moderate. This is going to be the highest yield of the day so far at 2.5%. And this is about 25% above the company's 5-year average. So just like with the other two, getting a decently higher cash flow return than on average over the last 5 years. And this is also going to be the highest payout ratio and the lowest 5-year growth rate we've seen so far today. The payout ratio, still not bad though, just below 60%. And the 5-year growth rate is also pretty nice too, coming in just below 10%. I'll take it. And Starbucks has been growing their dividend for the last 13 years. But anyway, guys, I think Starbucks is a great one to consider. And I think all three of these companies are really solid contenders if you're looking to make some additions to your portfolio. And along with those, there are still quite a handful of other stocks out there that I think you need to keep your eye on. The first of which, guys, is actually going to be Apple. In the last month, Apple has seen a near 6% decline, and year to date, they are down a whopping 11%. So might be a good one to keep an eye on. Next up, we have Agree Realty Corporation, who's down 2.5% in the last month. And looking at their year-to-date performance, they are down about 11%. So a pretty big drop there. But if we zoom out once again over the last year, just in the last 365 days, they are down 16.5%. So we're seeing red all across the board. But anyway, guys, another one to keep your eye on is going to be APD, Air Products and Chemicals, who's actually up a little bit in the last month. They've seen a climb of 2.3%. But zooming out, looking at the year-to-date performance, they are seeing quite a big drop here. They're down nearly 13.5%. And then looking at the performance over the last year, they are down 12.3%. Next up, keep your eye on AWR, American States Water. They are down 2.4% in the last month. Zooming out, looking at their year-to-date performance, they've seen a pretty steady decline this year. They're down 12.66%. And then zooming out once more over the last year, another very steady decline. They're down almost 19% in the last year, and they are right there at their 52-week low. Now, along with AWR, another water utility company to keep your eye on is California Water Service Group. And I think we talked about this one last month. It was either last month or the month before, but either way, in the last 30 days, they are down close to 1%. Year to date, they are seeing a much bigger drop. They're down almost 13%. And looking at the performance over the last year, they're down over 20.5%. And of course, they are right there at their 52-week low. Anyway, next up, guys, keep your eye on the Hershey Company. They're down about 0.5% in the last 30 days, so nothing too crazy there. And year to date, they're actually in the green. They're up close to 3% so far in 2024. But zooming out across a longer period of time over this last year, the Hershey Company is down a whopping 23.6%. So it still could be a good one to buy at a bit of a discount, guys. At any rate, keep your eye on the Hershey Company. Moving on, Humana is another one that you really need to watch. This one just continues to get cheaper and cheaper. In the last month, they're down nearly 4.5%. Year to date, they are down 23.5%, so a very big drop in 2024. And then looking at the performance over the last year, this is the biggest drop of the day, guys. They are down almost 31%. And then next up, guys, we've got the monthly dividend company, Realty Income, who is down almost 1% in the last 30 days. The share price right now is looking pretty good. It's getting pretty dang close to that $50 per share mark, which is very sweet. But anyway, looking at the year-to-date performance, Realty Income's down 8.3%. And looking at the performance over the last year, it is down 13.3%. Anyway, next up is the J.M. Smucker Company, SJM, who's not seeing a crazy drop in the last month. There's some red there. They're down 2%. And the same is true here year to date. They're down about 2.5%. But if we zoom out looking at the performance over the last year, SJM is down a whopping 21%. So this one could be a good one to keep your eye on. Moving on, guys, Vici Properties is still definitely one to watch. They're down about 3% in the last 30 days. So a bit of red there. Year to date, Vici is down 8.66%. So a nice little drop there. And then over the last year, they're down 7.2%. And then sticking to the REIT sector, guys, I think WP Carey is definitely one to keep an eye on. They're pretty flat in the last month. They've only dropped about 0.25%, but year to date, they are down about 14%, so a much bigger drop there. And then over the last year, it's down even more. They're down 26.3%. Now, those are all of the stocks that I think look like good buys right now. And in this next video right over here, I'm telling you about another stock that is the exact opposite. This one's actually a dividend king with over 50 consecutive years of growing their dividend, which sounds great, but I think this dividend king is a ticking time bomb, and I think a dividend cut might be on the way. So click right over here to find out why, and I'll see you in the next one.